All right. Thank you, Adinda and Maud. I appreciate that. This is my first webinar on FX Street as being posted into the chat, and I appreciate the opportunity to be here. So thank you so much for allowing me to be here. We're going to talk a little bit about trading the news and using the technical ways to trade the news. And I am Blake Young. I work with InvestTools and TD Ameritrade, and as we work with InvestTools and TD Ameritrade, I also do Shadow Trader, and with shadowtrader.net, where we also have a newsletter and a weekly FX hour there as well. And it looks like there's the bio for me there in the chat, so if anyone would like to read that further in detail, you can see that there. Just quickly, I'll be showing our disclosures that we use for InvestTools and TD Ameritrade, and so I'm just going to go through those quickly and let you read through those and watch those on the recording. Just as a reminder, I'm not a financial advisor, broker, or dealer for you, and so none of the things we talk about today should be considered a recommendation or advice. It's not. It is educational, illustrative purposes, and what I want to cover today is I want to cover how to learn trading the news, different techniques for trading the news, recognizing the pre-announcement, the conditions that allow you to trade these techniques, and then identifying how to apply each technique after identifying those pre-announcement conditions. Now, what I've noticed as we've gone through is there really are three distinct methodologies. When we're trading the news, we can look for trading with the trend. We can trade the breakout of some consolidation prior to a news announcement, or we can fade the trade. There we go. I think I can move that off. There we go. And I'll zoom in a little bit tighter here on the chart momentarily. It keeps switching windows on me though, so we'll get to that slide here momentarily. But when we're setting up for the trade the trend, why would we trade the trend? One of the things that I look at in the market is very, very efficient. The market is very efficient in pricing in what it expects. In fact, some people argue that the market is so efficient that no one can get an edge on the market. And I agree and to disagree with that, because the market always prices in the trend with a caveat. The caveat being that there's always a discount being applied in case they're wrong. There's always a little bit of discount. If they think it's going to be bullish, they push the price up, but not as far as it could be if they're right. If they think it's going to be bearish, the same thing, they push price down, but not as far as if they could be wrong. And so there's always a little bit of discount. If they're right, it's going to go up a little bit more. If they're wrong, it's going to pull back, but there's always a little bit of discount. So if we can identify the trend ahead of an announcement, we should be able to trade with the smart money, the big money, the ones that are analyzing the data and trying to price in their expectations. And so that's why we like to trade the trend. And one of the things that we look for in pre-existing market conditions is about 15 to 30 minutes before the announcement, I want to identify, and this is usually on a 15-minute chart, I want to identify lower highs, lower lows for a downtrend, higher highs and higher lows for an uptrend. And then when we see those come together, I set my order. And I place the order in the direction of the trend, identifying trend resistance for a downtrend or support if there's an uptrend. Identify the most recent stop area or the area above resistance, giving myself enough room to be right, knowing that oftentimes an announcement has some volatility, and then we simply take the trade in the direction of the trend, adjusting the stop as we go down, as we get lower highs and lower lows. Probably the most direct approach to trading the news. And I'm going to show you a number of examples here momentarily. But that is a very concise, clean way going in ahead of the announcement that I can identify a trend, I can use the charts, and I'm going to trade with the smart money. I'm going to trade with the big money. I'm going to trade with the big banks, and they will always be trading their expectations of the announcement. Now, on occasion, however, you'll see things not move. You'll see things consolidate, and they won't be going up, they won't be going down. And that's the time that we look for the opportunity for the breakout trade, and that's what I look for, is a breakout trade opportunity. And the way I look at the uncertain times is that they are reading the news. There's more than one component. I mean, we're talking about macroeconomics for crying out loud. But when we're looking at the macroeconomics of the upcoming event, they're saying, okay, this will have an impact, but I don't know how much. Over the last 5 or 6 days, I would argue that we have a lot of uncertainty. The last 5 or 6 days of the major pairs have traded in very, very tight ranges. Now, on the daily view, I think you could trade the bracket or the breakout trade, identifying support and resistance. But on the shorter time frame, we have a very similar setup. About 15 to 30 minutes before an announcement, I want to identify a range. If I know that the lows or the support areas are being consistent and the highs are being consistent, I'm going to identify the highs, the lows, and place a bracket around it, a channel around it. Or if you're a price pattern trader, we're looking for a rectangle. We're looking for a rectangle that's lasted probably 3 or 4 hours worth of time on a 15-minute chart, where we can identify 2 to 3 touches of resistance, 2 to 3 touches of support, where there really isn't a bias up or down. After that is set up, when we see that announcement set up, we're going to measure the distance or the size of the range, so the low and the high, the distance between the two. After identifying that, we're going to place an order 10% above the resistance, a sell order 10% below the support. So we have orders buy stops above, sell stops below, with our stop losses 30% below resistance for the buy or 30% above support for the sell. What we're doing in that situation, by identifying the range, by measuring that out, theoretically, as long as we get the fill, we are risking 40% of the range and going for 90% of the range. It's giving us a better than a 2-to-1 reward risk ratio every single time that we set up this chart. Now, for those of you that maybe are new to trading or maybe that haven't done a lot of reward risk ratio analysis, a 2-to-1 reward risk ratio means that you only have to be right 1/3 of the time to break even. Now, if we're getting a 9-to-4 reward risk ratio, that implies that you only have to be right 4 out of every 13 times to be able to break even on these setups. Now, I would imagine that if it was going to break out 10% out of a range, that we should probably be able to see that type of a probability come together, that we might even be right half the time. What if we're right half the time? Well, we're right 50% of the time when we really only need to be right about 30% of the time. And that will generate profitability. Now, the last setup, before we get into the charts and show you some of these strategies and recent activities, the last strategy is to fade the trade. Have you ever noticed, have you ever been to Vegas, Atlantic City? Have you ever watched a roulette wheel? Has anyone seen that before? You've seen the roulette wheel, and the roulette wheels. What are the probabilities? What are the outcomes of a roulette wheel? When you think about a roulette wheel, your choices are: it can come up black, it can come up red, but then we have that green and that green zero and that double zero green, right? But the casinos certainly aren't dumb. They know how to make money. So what they do is they post the recent gains or the recent wins. They post what numbers and the colors up on a board. Why do they do that? They do that because they know that people will try to fade the table. With the roulette wheel, they know that if they show that the last 9 spins have been black, people will start betting on red. Does the roulette wheel care that the last 9 spins have been black? 10 spins that have been black. 15 spins that have been black. Does the roulette wheel or that little marble care? Absolutely not. The probability is still 50%. So when we start looking for, there we go, sorry. When we start looking for the idea of identifying the fade, we're talking about that idea to a certain extent of identifying when it's gone too far. Now, statistically, the next spin is 50-50. I will agree-ish, 48.5%. I will agree with that. The next spin is always at roughly 50-50 odds. But what are the probabilities of 13 black, 14 black, 15 black being spun in a row? Can we identify the high point of a ball being thrown in the air? Can we identify the price when it's gone too high or too low? Because if we can identify that and start looking for that, we should be able to find an opportunity when it starts to pull back. The idea of fading the trade is that people overreact to the news event itself. We already have the institutions and the big central banks pricing in their expectations. Sometimes they identify a trend, sometimes they are uncertain. But when it breaks free, oftentimes there's an overextension. Oftentimes it goes a little bit too far. So we want to look for that overreacting to the news, and that can provide us with more opportunities. The setup is that we actually wait for the breakout to occur. We wait for the announcement, we wait for the breakout to occur, and after the breakout has occurred, what we're going to do there is we're going to simply anchor a Fibonacci on the last low to the current high, or the last high to the current low, and we just start tracking that Fibonacci every 5 minutes. We can drop it down to a 5-minute chart. Every 5 minutes, we continually move that Fibonacci retracement out further and further and further and further until it has stopped going high. After we wait for the announcement, we've anchored that fib, and we see it pull back through the 38% level. We look for it to come all the way back to that last support. What that does is it allows us to set up a fade the trade situation. If we're selling when it closes inside that 38% range, roughly what we're looking for is we're looking for a 2-to-1 reward risk ratio again. We're going to risk back up to the highs, from the 38 back up to the high, and we're trading from the 38 all the way back down to the 100. That retracement gives us about a 2-to-1 reward risk ratio again, and it allows us to use it with the market's volatility. What I like about all of these strategies is they automatically adjust. They automatically adjust to the pair's volatility. They automatically adjust to the market's condition. They automatically adjust to the sentiment. Because what are we measuring? We're measuring this pair. We're measuring this currency pair from its high to its low. We're measuring this currency pair's range when we're looking at the breakout trade. And we're measuring that specific currency's trend when we're setting this up. So this will apply across the board to every currency pair that's out there. This will allow me to trade the pound yen, the pound dollar, the pound CAD, the euro pound, if I'm waiting for the Bank of England to come out with their rate decision and their monetary policy. So going into the charts, let me switch over. Take that off. We're going to go into the chart here for a minute. And we're going to start with our euro-US dollar chart. All right, you should be able to see my euro-US dollar chart now. See that okay? Whoops. Try that again. Do you see my chart all right? So when we're looking at the euro-US dollar, one of the things when I teach with investors and talk about a chart, we talk about the fundamentals. We talk a lot about the economics and what causes the currency pairs to move. But if I were to look at this chart, and if I were to ask the group, looking at this chart, can you tell me, without looking at the dates down at the bottom, can you tell me which day non-farm payroll happened? Non-farm payroll is known to be the most volatile market announcement for almost all pairs. Could you look at the chart, look at the candles, and tell me when that occurred? Can you tell me when CPI came out? For those that are paying attention, that happened today. But to go back of these, without looking at which one was the first Friday of May, could you tell me which one of these was non-farm payroll? And I would bet you donuts for dollars you can't tell. Right, Jack? So as Jack's pointed out, you can't tell. And so when we're looking at this, even the most volatile announcement that we look at, the non-farm payroll, the unemployment number, even the most volatile announcement, isn't causing the pair to run outside of its normal range. And that's why those ranges and those trends still are valid. So as we're going into this, let's look at what happened this morning. We're going to drop this down into a 15-minute time frame. We're going to zoom in, and that announcement happened going into this time period right through here. So my time, it's about 6 a.m. Now, if I were looking at this on the 15-minute chart, if I were looking at the pre-market conditions, what would you say? Is this the one that you would say there's a definite trend, or would you say this is more of a non-trend bracket trade? And again, focusing really on this little time period right through. I would agree with the idea that this is likely a bracket trade. So if I can identify the bracket, I might throw in a channel. And we're anchoring the highs and the lows through there, identifying the closes on these 15-minute charts. And I can certainly grab the shadows if you want to grab the shadows as well. Let's grab the shadows on it for fun. Might even come down like that. So going into the pre-announcement this morning, we're going to go back in time and hit a couple more, and we're going to talk about the fade on even the breakout. So when we see the breakout setup or the trade setup, we'll even talk about how the fade works. So if I identify the support and resistance levels this morning, pre-CPI, CPI is still important. Consumer Price Index, the consumers account for 60% of the U.S. GDP, 60 to 70%. So prices in the Consumer Price Index, regardless of whether the market pays attention to it much, we pay attention to it. And as we're looking at these moves up and down, it's going sideways. Let's measure the distance. Now, if you look at my cursor, you should be able to see that it's about 45 pips high. This channel is about 45 pips high. Now, that's fairly snug for the euro-US dollar. It's actually a fairly tight range. But if we were to follow those rules, what we're looking for is we're going to look for, follow the rules with me, a 10% breakout high. So we'll put in a note here. And we'll use our text notes. So from 25.88, we'll come up 5 pips to 28.93. Buy stop, 10% of range above resistance. Okay, right there. Now, we'd also come back inside the range 30%. We're going to have to round on this one as well. So 10% was 4.5 or 4.5. 30% is going to be roughly 15. So we'll come back 15 pips inside from 125.88. We'll come back 15, which is 125.73. So our stop is here. Stop loss for breakout. Okay. Now we're going to do the same thing on the bottom side. 5 pips lower takes us down from 125.43 down to 125.38, which is just barely off the page here. Sell stop for breakout, 10% of range. And then we'll place 130% in here, which again is 15 pips. And we're going to take this up to 125.58. Now remember, that's just the stop loss for the sell stop. If the sell stop doesn't trigger, we don't even need to worry about it. Okay. So as we see this going into the market conditions pre-earnings or pre-CPI numbers, you can see we have the range. We have a definitive range. We have these highs roughly that are in this area of 125.88. We have these lows down here at 125.42. And as we're going along, we can see on the announcement, as it comes out, we obviously break through the high. Now this happened at 7:45. It actually happened a little bit after, and we finally did get the breakout. And as we got the breakout, we hit the 10%. What would our target be? So if we duplicate this is our channel. If we duplicate our channel and just slide it up here, the target in this situation would be about 126.32. And so far, you'd have been into the trade at 125.93, and it's slowly rising. We're pricing in that. Haven't hit the target yet, but still fairly bullish. If we go half the distance, I'm willing to tighten my stop up to the breakout or even to break even. But right now, you can see that breakout tested, it held. We can now manage our way out of this trade as we move forward. Let's go back in time again to the previous day's announcements. And most of the announcements, as we know in the U.S., are at 8 Eastern. The U.S. announcements, I should say. The U.S. announcements are about 8:30 Eastern. So here's half hour before. This one, not a bracket, is it? This one has a definitive uptrend. So as we're looking at this being a definitive uptrend, if we're looking at this as a trend trade, we could anchor our lows going into this, our trend lows. You could use the shadows. I know some people like to use the shadows. Some people like to use the closes. So we could use the closes or the lows. We have identified going into it that we're dominantly uptrending. And so we would follow the rules. And the rules are buy, find the last major support, which would be down here, and we can line that up with trend support. And let's place our stop just below there at 125.12. Let's go to 125.08 at that trend line support. You see after the announcement occurs, we pull back. Don't hit our stop yet. It takes off. And this would be a trend trade. And since it is a trend trade, we're just looking for higher lows now. Anytime I see a bounce, I don't count it as a low. I don't count it as support until we clear the next high. So as soon as we close above this 126.03, I'd be willing to count the support level and tighten up our stop. We'd have got into this order pre-announcement right through here, or excuse me, right through here. This is where we were, about 125.28, trading the trend. We're up at 126.01 as we're seeing the price move along. We haven't cleared those highs, so I don't have really a reason to tighten up my stop. And at this point, usually after we get to about 3-4 hours after, we know that we're probably done with that trend. But as you can see through here, we're really no different from yesterday to today. We have had an order that would have got us in low. we could have adjusted our stops along here, but it really isn't until about right through here the next day that we would have had a clean higher low that we could have had we followed with a higher high. So you'd be in that trade and roughly making 40 to 50 pips. So far, each of the trends and the breakout trades have set us up for the potential of 40 to 50 pips per trade on the euro-US dollar. Obviously, other pairs will have a larger opportunity. Now, let's look at the fade the trade. We already set this up through here for today's announcement. When the announcement happens, like I said, oftentimes it overextends. We do this on a 5-minute time frame. I just want you to see how you can trail this along and watch for the opportunity to fade that trend. Here's the breakout. Here's the announcement. We'll look at a number of other pairs. We can anchor the lows here. And initially, that would have been the trade setup. As you climb up higher, this is where we're at. And I usually like to use the closes, but you can use the high shadows and low shadows. Right here, if we close through this, in fact, it looks like we might do it right now. This is interesting. A little bit later to the game, but if we're looking at this breakout and pullback and run higher at this point looks to be that indication of being overbought, overextended. And you could tie an oscillator to this. You could certainly put it a stochastics, %R, a MACD, whatever your favorite oscillator is that you can identify divergences off them. Also check to see if you get a divergence as your Fibonacci's get up to that higher level. But if we close back inside this range, if we close below the 125.96, then it might be able to retrace and fade all the way back. This would be the fade the trade, fade the breakout. This is where we'd fade it through that 125.96 all the way back down to 125.62. Now, 30 pips may not seem like very much, but again, we're only talking about over an hour and trading against the hype, against the move that seems to be or appears to be overextended. Let's go over to the pound US dollar. And if there's a specific pair that you want to look at how the news announcement played out and how we would have set this up going into the news announcements, be glad to cover any of those. So let's go into the 15-minute chart again. As before, we're going to drop this down until we're looking at about 6 a.m. this morning. 6 a.m. my time, 8 a.m. Eastern. Tofig asks, can we use the same rules for a higher time frame like hourly? Absolutely. Absolutely. And the reason why I'd say absolutely again is because we're adjusting to the trend and the consolidation and the breakout. And so the reason why we look at the shorter time frame on the fade is because if you are going against the trend, I want to be a little bit quicker to respond, right? Have no problem with using the hourlies. On the breakouts and the trend trades, no problem at all with that. On the fade, like I said, I want to be a little bit quicker on the draw if it's pulled back more than 38% after a breakout. So on the fade, I would normally look at that as a shorter time frame. But I personally prefer the 15, the hour, the 4 hour, even the daily over the 5 and 1 minute. I'm not a big proponent of trading the 1 minute or tick charts or 5 minute charts on any currency pair, just because I believe you can set a stop loss and get a reward risk ratio on the 4 hours and dailies that it can hit 3 to 1, 4 to 1, 5 to 1 a lot easier than you would ever be able to do on the 1 minute chart or 5 minute chart, especially if you're using recent support or resistance. So here's our 15 minutes, half hour before. You're welcome. Thanks for the question. 15 minutes or half hour before the announcement. This is a little tough, isn't it? Like we said, going 3 or 4 hours back. What would you say, trend or non-trend? This one's a little tough. So as I would look at something like this, knowing that it's fairly range-bound over the long time frame, but obviously showing bullishness in the shorter time frame, maybe I would have to set this up as bull. Maybe I take one position, a smaller position on the one side, and be ready to reverse it out and take it short if it goes down or and against this bullish trend. But knowing that I had a shooting star and some indecision 15, 30 minutes ahead of time, I might identify it as bull. That I have higher highs and higher lows, and that's going to draw a channel off of this. I might also identify the previous highs and lows here, knowing that we have a 73 pip target, breakout above or break down below. But I would probably look at this as a bullish trend in the short term. Over the last 3 or 4 hours prior, this looks fairly bullish. So to set up the trade, both as a trend trade and the bracket trade, we'd want to place our bracket trade with this buy stop 10%, which is, again, at 73 pips, so 7 pips higher than the high. Stop loss 21 pips inside the range. Sell stop 10% or 7 pips below the lows. Again, the stop loss 21 pips above the support. But as I'm setting this up for the trend trade, I would probably look at this and say, let's give it 15 more minutes again. Okay, I think I can buy into this. We have an overall uptrend. Let's go ahead and buy the trend trade here. Place our stop down below these lows. We got to give ourselves at least that shadow because we know that's the volatility. Let's put it down to 90 or 154.90. So I'd put it about 5 pips below the low, buying in before the announcement at 155.11. Right there's the announcement. We traded with the trend, dominant trend. Price is rising. Right here, remember our range? 155.46 plus 7, 155.53 is where we'd get in again. There's that 7 pip breakout, 10% of the breakout. We would have bought in again potentially there. And at that point, because that's the breakout trade, I would have to consider tightening both my trend trade and my breakout trade to the 30%, which is going to be right in here. 21 pips would be 155.26. As you can see the low here, 155.24. We might have stopped out of both trades. One loss, one win. And it might have been done. It is interesting to see that trend trade holding out. See that? Trend trade's still there. What is the minimum worthwhile range? Great question. The minimum worthwhile range, the way I look at it, as we're looking at different currency pairs, what I want to see is knowing that we're looking for about 9 to 4 reward risk ratio on the bracket, and trend trade, we're just looking for a solid trend trade. But knowing that that's what we're looking at, I want to keep that 2 to 1 ratio the best I can, which means adjusting for my spread is important to me. I would like to see 20 times whatever the spread is. So if I'm on the euro US dollar and I have on average 1 to 2 pip spread, then I would like to see 20 to 40. So I'd really say 30 to 40 on the euro US dollar. If I had a cross, let's say I was looking at the pound yen, and assuming, I don't know what your spread is with your broker, but if you had a spread of 6 pips, I would probably look for a minimum of upwards of 120 pips, 20 times. Basically what I'm saying is I want my cost, the cost of my spread, the cost of my trade, to be less than, pull this back a little bit. I want to see the cost of my trade to be less than 5% of what the trade could be worth. So by timesing the spread times 10, that sets me up to have a 50%. Try that again, 5%. That my total gain target is my cost of my trade is 5% of my total gain target. Or in other words, my gain is 20 times my spread. So it does that one. You would have to adjust a little bit, and you want to adjust it based on the currency pair and what spread you're paying. I don't want to set up a spread that's got a 9 pip spread, place a stop that's 10 pips lower, and I'm going to instantly be triggered on my stop because of my bid and ask spread. I don't want to be targeting a 20 pip move when I'm going to pay 6 to 7 pips in the spread, where I'm eating up 60, 70, 80% of my trade. Does that make sense? Looking at something like the pound yen going into today's announcements. It depends on your broker as far as widening and tightening spreads. Some brokers, dealers have fixed spreads, some have variable spreads. And again, think of it as a market maker. What they're doing is they're adjusting to be able to meet the market's demand. So if people are not willing to buy it or sell it at a specific price, they have to widen out the spread to meet or make that market. And again, I can't speak for all brokers. Some broker dealers have a fixed spread, some do not. Some let them move, some do not. And when they are wider volatility, you need to make sure you have that adjustment. I would go with your average, though, knowing that if we're getting in 15 to 30 minutes ahead of time in a trend trade, that's not going to be as big of an issue. On the bracket trade, if you have variable spreads, that's going to be definitely be an issue for you. So the pound yen going into this, going into today's announcement again, walking through, we'll walk through a couple more as we're looking at these. And again, any questions on the three systems, three methodologies, let me know. But what we'll do is we'll walk through a couple more, knowing that we had a support level down here and a resistance level. Normally I may have said, look, there's a slight bearish bias going into this, but I can see that I also traded sideways for the last 6 to 8 hours going into the CPI. Now, CPI doesn't impact the pound yen as strongly, but the pound is correlated to oil, the yen is correlated to the VIX and volatility, and so for the U.S. market it would. So if I were looking at a trend trade, maybe I'd lean to the bearish bias, but I probably would have set this up as a bracket trade. Looking at this bracket trade, you can see it's got 58 pips. This is probably too tight unless I have too tight of a range, unless I have a tighter spread. I mean, I'd have to have a 3 or 4 pip spread on the pound yen to be able to justify the bracket trade on this. But walking through this, you can see it came up and tested. Like so, we normally look for 10%, so we wouldn't have quite hit the trigger there. And as you can see, fantastic. If we're adjusting for that volatility and giving ourselves that 10% breakout, wouldn't have triggered the trade. It didn't move more than 5 pips. We needed a 5 pip breakout, a 5.8 or 6 pip breakout. It didn't happen. We didn't trigger the trade. We're not out. We never triggered the trade. The spread was probably a little bit too tight. Let's try that again. The range was too tight for the spread that we'd have to take on the pound yen. Looking at the dollar CAD going into today's and yesterday's announcement, so we're going to go back to yesterday at 6 p.m. Actually, we can go about any day this week. You could even play it on the open if you wanted to. Think about the open, and most people don't like to do this going into the weekend, but think about going into the end of the weekend. Aren't we talking about 30 minutes like this? Going into a weekend, especially in the Forex market, during these times of volatility, isn't the weekend itself an announcement? Don't we know that there's going to be volatility around the weekend? The few times the market is closed, the same ideas can be used and utilized for the weekend. What makes news trading important? I don't care what the announcement number is. I actually really do care a lot, but that's because I have, some of my training was in economics, and I spent a lot of time in school in economics and statistics and all that stuff. So I do care as far as for my own knowledge and understanding, and my newsletter at Shadow Trader and my commentary, at Investals. I definitely care about it. But as far as my trades go, as far as my positions on a news type of trade, I don't care what the number is, because sometimes it's better than expected and it falls down. Sometimes it's worse than expected and it takes off. So trying to measure what the market's true sentiment was towards something is fairly difficult, but the price doesn't lie. And so going into the announcement or going into the weekend, we're going to go through 3 of them here with the dollar CAD. And the dollar CAD can be kind of tricky because the US dollar and Canadian dollar are so tightly correlated economically that it trades in weird ranges and has random spikes on occasion. I think much of that is because the Canadian economy and the US economy do so much trade, and there's certainly high demand at some moments and low demand at other moments. So looking at the dollar CAD going into the weekend, when we're going right into the weekend, we could identify the same idea. Obviously a trend. This would be a trend trade setup. Bearish trend going on, pull back and bounce off resistance, falling, probably come back to this resistance, 127.80, or even up to 129, or 130. So as we're looking at a breakdown here, and the close down going right into the weekend, that would have been a sell signal. Trend trade ahead of an announcement. Now the announcement again is just simply the weekend. The weekend we'll get a lot of information. I would place the sell order there, place my stop above the recent resistance, and let's go to 102.90. Excuse me, 102.90. On the market open, you would have gapped down, looking for resistance and another close lower, and then you tighten up your stop. You fall down, you pull back, create another resistance. I'll move my stop to this if we close through these lows, which we did. So then the stop's right through here. And now we're on Monday. We're looking for Monday at 6 a.m. We're stopped out of that trade, but we would have been in that trade at 102.63 roughly, and out roughly here at the stop loss at 102 or 102.16. Now that's 45 pips. Dollar CAD, it's got a tight 2-pip spread on most pairs. That would be fine. Now we're looking at 6 a.m. So there's the weekend trade. Let's look at 6 a.m. on Monday. There's 6 a.m. on Monday. Again, identify the trend. It's not a, wouldn't call this a bracket trade. Identify the trend. It's a buy order. Place the stop below the lows. See the announcement comes out, breaks out, and starts to fade. Now this would have been a great one for fade the trade. I know you maybe can't see it right here, but here's our 6 a.m. There's your little announcement that is your breakout at 6 a.m. You might have attached a Fibonacci retracement, again, off the lows to the highs on that 5-minute chart. When it broke through that 38, you target it back down to the 0. You can see that would have hit it. See the overreaction in the opposite direction? Same idea. Scroll over to 6 a.m. the next morning. And by the way, that fade is a great way to manage an existing trade as well. Even if it's just simply to get out of your trend trade or your bracket trade if it doesn't quite reach your target. 6 a.m. This one's a little bit tougher. I would say dominant downtrend. 6 a.m. going, this is 6 a.m. my time again. That's about 30 minutes before the announcement. There's your announcement. Obviously, like I said, downtrend again. Selling that, placing your stop above. Price drops. We have to tighten up our stop. Small loss on that one, but again, here's the fade the trade. When you see it pull back and close inside that 38%, not only can you take your winner off the table, but then look to fade it back up to 100%. That one would have worked out very nice as well. Let's jump over to, try 6 a.m. again. Bracket trade, would you agree with that? I kind of like these lows because I can hit multiple touches on this intraday chart. And going into it, I like these highs right through here. Dollar CAD. That's only 20 pips, probably too tight. Too tight for a bracket trade, but just so you can see it. By the time you got into the trade, you might have been able to hit your target. Nope, you wouldn't have. But like I said, it's too tight for that one. Scrolling over to today. 6 a.m. I'd favor a little bit of bearish move here. Down, down. So price drops, but then our resistance would have to be up here for it to do the trend. This one might be a really good one for your hourly fig. You might use this more of an hourly. Identify that you're in a downtrend. You've pulled back ahead of the announcement. Place your stop above the recent resistance of 102.95. Even if you're calling it a bracket trade, you'd still be looking for a break below 102. Yeah, it's about 45 pips. There's your breakout. Your trend trade is still working out. Things are dropping. Now you created a lower high, and now you're creating a lower close. Now you can tighten up your stop. That put you to almost break even. And now this is where we're at today. Let's drop this down into the 15-minute time frame so you can look at that fade the trade, or the 5-minute time frame, excuse me. 5-minute time frame. Going into that 6 a.m. And this is how you track it. After you have the announcement, it breaks out. It's obviously trending down. Every candle you go from the high to the low, stepping it over. Oh, new low. And as soon as you start making a new low, you just move that down and lower again. 6 a.m. my time. That's 8 a.m. Eastern, right before the U.S. announcement. That's what I'm focusing on, U.S. economic announcements. That's the time frame. I trade these a lot, but it does work on other announcements, European announcements, Japanese announcements, British announcements, Canadian announcements. You want it half hour before the announcement. And so this is half hour before the CPI announcement this morning. So when we anchored the high to the low, I want you to notice we came down here. We closed inside that range. That's the 38%. That would be a buy order. This is fade the trade, and then I'd expect it to come all the way back up to 102.75, which it doesn't quite reach there, does it? Came back down and bounced. We got close. Ooh, breakout. So definitely some bearish going in there. And by the way, when we break through the 61.8, I like to tighten up to the 50% level at that point. All right. I know I've supposed to take about 45 minutes today on this, but I've presented 3 different ideas, 3 different methods to trade the news. If you can identify the trend, if there's a dominant trend going into it, you can look at that and assume that the banks, the central banks, the big institutions are planning and plotting and estimating what should come out in that announcement. And after that it comes out, trade with the trend. I mean, I look at the idea that if I'm in the middle of the ocean and the big central banks are the whales and we are the krill, right? We're just a little tiny krill. Where's the safest place for a krill? Swimming behind the whale, right? Not trying to swim in front of the whale, not even to the side of the whale, but behind the whale. That way you can get the draft of the whale and you're not going to get eaten by the whale. So as we're watching this, if I know there's a trend, follow the trend. If I know there's uncertainty, I know they've drawn lines. Those are the little demarcation lines. And after they've drawn lines across the highs and the lows, if I can measure that out, if I can get about 20 times my spread, then there should be an opportunity to be able to take a trade in a risk-controlled fashion, giving myself 2-to-1 or better on that breakout trade. If it does break out and reverses, pulls back more than 38% of the breakout, I can usually trade that back out for the full retracement. But as it climbs, if it breaks through the 61%, the opposite side, then I'll tighten my stop at 50% as well and let it go all the way to the top. So 3 different trading ideas and methodologies that we can use in trading the news. You know, I can't really give you, I would definitely point you to FX Street as far as that list of the brokers and the fixed spread brokers that you want to look at for FX trading. I know they have some great information on their website. As well, definitely FX Street is fantastic for their calendar. That calendar gives you days, weeks, and months in advance when these major announcements are going to occur. I don't look at these major announcements again and try to determine what is going to happen. Yes, I do it for my commentary, but not for my active trading of a news event. Knowing if there's a news event, that's what I need to know. Is it a major, impactful, volatile news event? That's what I need to know. Give me the time, give me the place, right? And that's what we'll look for. And thank you so much. Maud just put in the economic calendar. I look at that calendar quite frequently. It's a fantastic calendar and something you can look at there. What's the key difference? Tim's asked the question, what's the key differences between trading news events on indices and Forex? Well, a little bit of the difference, I would say, is that the Forex trades fluidly. The Forex trades 24 hours a day. It's $4 trillion a day versus indices. I mean, even the New York Stock Exchange is, what, about 1/90th the size of the Forex market. And so, you know, as far as that goes, that it's liquidity for me. It really does come down to liquidity. Let me change my camera over to my slides again. But it comes down to liquidity. That's the major difference. But if you are trading futures and futures indices, then yes, you could do the same technique. Again, make sure you're offsetting your cost of your trade. That is key. Make sure you offset the cost of your trade and that you're getting enough of a move on those brackets. Let me just pop up this again. So when you're setting this up, again, look before the announcement. Keeps jumping over to there we go. Before the announcement, identify which trade setups you're going to do. Look for clear trend or a range. Set up the trend trade or breakout bracket before the announcement. Then after trade, look for the retracement and the fade to both money manager position as well as look for an opportunity to go the opposite direction. So we're going to go through a couple more, but we are low on time. So let me just answer a couple more questions as we're looking at this. And actually, since it just keeps jumping screens here, and I can't see what I'm looking at there, I'm going to shut that off temporarily. How do you get access? You can access it through MyTrade as well as Shadow Trader. So go to mytrade.com. You can find me there. You can also find me on shadowtrader.net. Like I said, I teach for InvestTools. As far as the education program goes, I do teach for InvestTools. You can find me there. And so you can access that. I just put a link into the chat window there as well. But you can follow that there. You can get access to that newsletter. You can get access to the different presentations we have. My email, I'll put that in here in the chat as well. Actually, that's on the website, is it not, Maud? Should be on the website. And then you can access that under the. Now this is recorded and will be posted, and like I said, that will be available with my email contact information as well. So I appreciate the time. I don't see any other questions, but I do appreciate the time. Appreciate the opportunity to present today. I had a great opportunity to be here the first time again. If you have questions, get me emails. Hopefully we found that insightful, beneficial. We can find opportunities to trade in this market. And I do think there's a lot of opportunities. This is not, just because the market's gone sideways doesn't mean that the market's not giving us opportunities, whether shorter term or longer term. There are a lot of opportunities. I don't expect monetary policy to shift anytime soon. I don't expect the Eurozone debt crisis to be resolved anytime soon. And that means that we should see continuations of some of these trends. Now, U.S. came out with CPI, the worst since 2008. So guess what? Again, we have struggling economies. And I don't care, again, on the news, I don't care whether it's better or worse. I care how the market responds to it. Show me the price. Price is king. And so if I can identify what's going to happen, I don't care which economy is doing better or which economy is strong or weak. I care which one is stronger or weaker, better or worse, because it's a comparative game here as we play the pairs. And then finding the news announcements, that's where we can really find an edge. So, all right. I think that's going to do it for us. So, thank you, everybody. Again, thank you for your time. And yes, I hope to be back here again soon. And Maud, just send me an invitation and we'll see what we can arrange. Thanks, everybody.